All right, welcome everybody. Doug here with the LincolnList.com. This is the Stock Market Weekly Report for the 8th of February. We got a lot of stuff to talk about. We've got an interesting market, a crazy market, a good market. I mean, we've seen some incredible opportunities. If you followed us at all last year, we only had 17 losing days all of last year, only one so far. And it doesn't really matter what's happening out there, bullish, bearish, up, down, sideways. If you have no biases, and you're a trader and you go into each day with no bias, just thinking trade by trade, man, you can do really good at this business. So if you're kind of struggling with that, that's one of the things as traders that we struggle with a little bit is removing emotions from our trading, trying to eliminate biases and just focus on one trade at a time. If you're having trouble with that, visit the LincolnList.com. Take a 14-day free trial to our live trade room. Don't take my word for it. Every trade we make is live in real time on screen. So let's move along. Talk a little bit about the SPY. As I said, we got down to some interesting levels. We had a lot of stuff going on. We had some Fed talk. We had a jobs report. And really, if we go back to the beginning of the year, technically, since the SPY here broke the 50 moving average here on the daily chart, just right at the very end of the year, once the year opened, it has just been barbecued from start to finish relentlessly, and it hasn't even recovered as of yet. What's really interesting when we look at this chart, if you followed some of the tweets that we talked about, we mentioned this, is this 187 level. If you look down at the bottom right here at the chart, right at Friday, we've got down into that, let's say 187 flat to make this simple. You look at it 2 days before, on Wednesday, we were in that level too, bounced pretty good off of that. That's also a level that was a bounce spot from the 28th and the 27th of January. So you can see here, there was a nice couple of bounces here. You're back there. So we got about 4 shots here within the last couple of weeks at this 187. It's also a really significant number too, because if you go back, you just kind of draw this back in history a while, you'll see going back into September, and even from the flash crash spot, the next day gap open price, this 187 has some short-term relevance to it because, I mean, this thing just continues to hit that level. Now, why I'm bringing this up is if you're looking for one side of the market or the other, I would have to say that if you start pressing down, and I would think the way the action was, it was just relentless on Friday. I mean, there was no ramp whatsoever in this market. We've been seeing a lot of ramps going there the last hour, last 30 minutes. But nothing there on Friday. There were no buyers to be found. They already skipped town. If it wasn't for the market closing on Friday, this thing probably would have ended up down here. So let's look at a couple of different scenarios. If you can hold this level early on Monday, then perhaps, you might see a little bit of a bounce. I couldn't get sold on any kind of really strong short-term rally until you get above some of these resistance areas where we got there in the mid 194s. So any kind of bounce from 187 to 194 would have to be taken with a grain of salt. You couldn't trust it. You couldn't trust it. You can't go to bed at night and wake up the next day and think, damn, I'm getting smoked. You just can't trust the market. And I don't think you're going to see any solid rally till you can get up there, make a couple of strong closes, then we can talk. Now, you go underneath of this level. This thing closes underneath of there. Man, it's probably going to get nasty. You're probably going to get back into this 181. We talked about the flash crash lows there for a while. We talked about this when it happened here earlier in the year. Markets, the way it is, what we're seeing here is unlike a lot of corrections that happened in the past. They would have these flush moments where everybody just went off the deep end. Like you just panicked out. And there was a couple panic moves that you had back here. But really in this kind of sell-off, we haven't seen any panic yet. I mean, it's just been methodical. Like it's slow, it's bleeding, it's just trickling down. I mean, you've yet to see that. Now, are we going to see it? I don't know, man. I don't know. But you got to keep that in mind. So if we break these levels, I would think it would drift slowly into these 181s. Maybe under there you see a really, really big flush. But I would think here is if you're looking for bullish, you're looking for a turnaround, I think you got to shake everyone out. You got to scare them. You got to get everybody out of this slow, bleeding meltdown. It's got to just wipe everyone out. And usually when there's bear market corrections, that's what you get. You get a capitulation point where everybody throws in the towel and then things turn around after that. I don't think you got that yet. Maybe I'm wrong here. But anyway, we talked enough about the SPY. Really important to pay attention to this 187, how it handles this thing Monday. pay close attention. You get underneath of that, you need to be pretty cautious about any kind of long positions. If you're shorting, have at it. Just have at it. But that's the deal here with the SPY. Now, as we look at a couple of different stocks, there are some neat looking opportunities, I would say. One would be WUBA. Just as we look at support resistance, we got an awful lot of WUBA support here that's going back for months. Right here at this 50 level, I think this is a great short on any kind of weak bounce like it was on Friday morning. Nice little weak bounce there. I think it's just a continual sell. It's hard to short once it's, when I say shorting, we really want to look at bounces, and you just don't want to just jump into it once it cuts a level like this, because you've already gone down 7.5%, $4 or so on Friday. So it's difficult to just say, let me short all the way down here. That's terrible. Even if the stock goes down or lower, it's a piece of junk. That's a whole different story. You can't short in a hole like that. You're putting yourself in a really, really bad position. It's the same way as breakouts. You can't chase stocks all the way up here and buy them. That's not a good strategy. You might get away with it a few times, but over the course of 20 or 30 trades, your life is going to be very miserable. It's the same way for shorting down here at the lows. As I said, the range in it was really, really wide. You're down $4. And just kind of like the SPY, if it wouldn't have drifted so far into support, it probably would go more. So what I'm looking for is maybe just a little bounce here into some of the shorter term resistance, 51, 79, 52, any kind of news story that comes out, and gets this thing to bounce a little bit. I'd be right on top of this. Eventually, one way or the other, maybe it doesn't happen, or the scenario doesn't set up well for a Monday. But, maybe a couple days go by and it bounces and tests that level and tightens up a little and then breaks it. Then you have a really good bear flag breakdown. I don't necessarily, that's the kind of trade I do, but I couldn't fault you for wanting to take something like that. Nonetheless, the bottom line here is this is a really, really important level to the Webster. I mean, 50.45 here, 50.46, it loses that. It was trying. Look at the end of the day there. Whatever. We'll see if this thing can actually get rid of it. Also, another stock that's worth a look here is PJC. I like this one because you've got 2 days of a really, really big move. And I say big move, I mean, we've certainly seen a ton of other stocks with much wider range. And one of the things that the day presents to you as a trader is you never know what's going to happen when you get up on Monday. Are you going to get a bunch of gap ups? Is some news story or a PR going to come out and squeeze a stock up, ridiculously, like 25%, like we had on Friday here with UB&T. I don't know what people are doing. It's 25% move starting out the day in pre-market, and you're tapping into resistances close to 35. You got to be nuts to buy that up there. I mean, you see this thing fade. It's a no-brainer fade. It's going to be so difficult for a stock that goes up 25% before the market opens to continue to go up. What was it going to go up another 25%? Yeah, sure, we see penny stocks sometimes do that, cheap old micros. But stocks like this, I'm never say never because we have seen them. But man, you're really got the stats against you on this one. That's just nuts to buy this thing at 35. It was a good short for us. But anyway, that's another story. I'm kind of talking about, when I'm looking at PJC, I'm talking about the same thing. Percentage-wise, you got a pretty good move in this stock. It's already faded a little bit for 40, so we'll see what happens with it as the day progresses. I mean, as Monday progresses, there could be a pretty good short play in here. I mean, this was a good 2 days back to back for PJC, and it could be worth a look. Now on the other side, we got to look at a little bit of LinkedIn. It's so tempting, tempting to want to buy this. I mean, this is just, there was no lovin's to be found for LinkedIn. I mean, the big name stock license, to see them down 40+%. A lot of you guys haven't seen that kind of butchering on big named stocks when you see Apple's, the Facebooks. And we're talking about this whole market. You go back, you look at a Facebook now. After it ramped up really big after their earnings, it sold off all of the earnings move. Now it's going back into the earnings gap. Google busting up huge on earnings last week and then turning around and just giving it, not all of it back and then some. So these companies that are reporting earnings are getting smoked, whether it's good or bad. And I always say, and I don't know how you can play earnings. It's just a crapshoot when you're going in there. You never know if you're going to wake up to a massacre like this. I mean, you go long in there. I don't know how you can do it. You're just taking way too much risk. Point is this. There's no love for these stocks. One of the things about a bear market is that when you're in a bullish market, people have the blinders on. Bad news is good news. Good news is great news. Anything thrown at the market like it had been for years, it just found a way to recover. Now, any news that hits it is just terrible. There isn't anything good. Companies report record revenue, their stock gets smoked. So that's the kind of tape you're in right now. Is there are no favors here. As I said, good news, bad news, it's all translating to bad news, and the markets are getting sold, and we're at some really interesting levels. So as we look at LinkedIn, maybe if we begin the day, the only way I think I'd want to mess with this is if we really flush in the morning on a Monday or sometime during the week, and this thing just dumps under 100 or something, and everybody is jumping out windows, I'd be interested in picking this up just for a trade. There's no way I'm going to hold this thing for days. I'm not investing here. I'm just trading, because the bottom line, man, is a couple of months ago this stock was porking around 260. Now it's down to 108. It's probably going to end up a lot lower than that. I mean, this thing is hammered, and people are tired of losing money in these stocks, and they're going to get out, and you're going to see probably some more panic. So we'll see how this LinkedIn works. Something that's definitely worth a look. We'll see. I mean, you got to go all the way back, I think, sometime to around 2013 to find a support level for this LinkedIn. So we'll see what happens. So anyway, as I mentioned in the beginning, it doesn't really matter. One thing you'll learn as a trader is you don't control crap. In the market, you don't control whether the market goes up or down. The shares that you buy and sell, they don't do anything. They don't do anything to the price of the stock. The market's going to do whatever it wants to do. And you can't hope and pray for it to do one thing. You have to have a plan. You have to have a plan, because right now, even though I touched on some of these bases, I've got a plan Monday thinking, what if we flush? What if we gap up? What if we don't do anything at all? What if we just start going sideways? What's the strategy going to be? And you got to have a plan for that. Otherwise, you're just guessing. You're making life really tough on you. So if you're struggling with that element of your game, or you're just struggling in general, I mean, if you're sitting there looking, your P&L will tell you the story. If you're not happy with it, you're wanting to go to another level, you're wanting to have strategies that are successful in bullish and bearish markets, visit thelinkenlist.com, take the 14-day free trial. As always, I want to thank every one of you for listening to this video. As always, take care of yourself. Talk to you soon.